June 13th is going to mark a historical turning point for the global order, but also for financial markets, with Israel's launch of coordinated strikes deep into Iran targeting nuclear and military facilities across the country, and footage of explosions lighting up Tehran. The price for a barrel of oil did something that it hasn't done in over 3 years. It made its biggest intraday jump since the onset of the Russian invasion of Ukraine. Now, since then, Iran has retaliated with their own missile strikes, some reaching Tel Aviv. This doesn't seem to be just another skirmish. This is a full-scale war that is unfolding between the two regional powers, and the potential impact that is going to have could be absolutely massive. The impact on civilians is of course disastrous, but in this video we're going to be looking at the very real economic risks that the world faces as the situation escalates. The region is responsible for approximately 40% of the world's oil production. If it turns into a war zone, much of that supply could be cut off. Both Iran and Israel have the ability to target oil tankers and facilities, but more importantly, a blockade of the Strait of Hormuz is becoming a real risk today as the situation escalates. This is the narrow passage through which all of the Middle East's oil passes through to reach the rest of the world. In a full-scale war, Iran would be able to block it, creating a massive shortage of the world's oil supply and most likely a serious oil shock. Today, oil prices currently stand at about $70 a barrel, but the U.S. Department of Energy says that crude oil prices could spike to $200 a barrel in the scenario where the Strait of Hormuz is closed. That would be over a 150% price increase from today's level. This chart shows us all of the oil shocks that have occurred going back to the 1970s. This is something that we've talked about many times on this channel because of just how important it is. All of these spikes that you see here when oil prices jumped rapidly by over 30%. And in almost every single instance, it was followed by a U.S. economic recession as classified by the NBER. This includes some of the most catastrophic recessions, including the 1974 recession, the twin recessions of the 1980s, and arguably even the 2008 financial crisis was partly catalyzed by rising oil prices. In 2022, a recession was narrowly avoided for reasons that I won't get into in this video. Today, however, an oil shock would undoubtedly break the economy and drag the U.S. economy into a recession. A big jump in oil prices would spur inflation, leading to higher interest rates. It would squeeze consumers, leading to lower spending, and it would also squeeze business profit margins, leading to layoffs. All of these things happening at once would catalyze a recession. The question is, exactly how likely is that all of this is going to happen? As Alex Karp from Palantir has discussed, a potential global conflict is unfolding with the United States fighting a war on 3 fronts: Russia, Iran, and China. We already saw the first front open in 2022 with Russia, a conflict that seems to be ongoing, and it could be that we're now seeing the second front with Iran opening up as we speak. Israel's prime minister has certainly made it very clear that he would like the US to join the war against Iran, mentioning the nuclear risk to the US if Iran were to acquire nuclear weapons, and also attempting to convince Donald Trump personally by highlighting that the assassination attempts that were made on him had been conducted by Iran. For now, all Donald Trump has said is that he does not want the US to get involved and would like to see the tensions between the two Middle Eastern powers cool down and for the conflict to stop. To us, there are 2 big scenarios looking forward. Scenario number 1, the US does not get involved. In this scenario, it's highly unlikely that Iran would look to block the Strait of Hormuz, as doing so would guarantee that the US does get involved and wipe them out. In this scenario, we likely wouldn't see a substantial jump in oil prices, as the conflict would likely remain limited to Israel and Iran. There could of course be a lot of damage done, but the probability of a major global oil market disruption in this scenario is much lower. Scenario number 2, the US does become directly involved in the conflict. In this case, it's highly likely that the oil market would see major disruptions, as Iran would look to weaken the United States by any means they have, which would include a blockade of oil tankers. At this point, nobody on Earth knows for certainty what is going to happen next. But the reality is, unlike many of the previous tensions we've seen in the region in recent years, what we're seeing today could escalate into a major disruption for the global economic system. So what does this all mean from a portfolio positioning standpoint? Firstly, if you're making decisions based on research like this, you should know that you are trading. Investing is when you buy and forget for 10 years. This is not a part of your portfolio that you should be selling in these kinds of situations. The only thing you can do on the investment side is that you can dollar cost average down, buying more stocks if there is a big decline in the stock market as a result of the war. Trading, on the other hand, is professional market speculation. It is the art of constantly looking for opportunities and managing risk. This is what we do at Bravos Research. We find opportunities that we think will perform well over the coming months, but we also hedge against risks that we think can impact the stock market over the next few months. And right now, that's what we're doing, but with a very gradual approach. We're starting to add some exposure to some strong stocks in the energy sector that would benefit massively from this kind of big oil shock. We're also closely watching the price action of oil at Bravos Research. The price of oil is currently trending down, but according to our technical analysis, if oil makes a decisive close above $76, it would be a signal for us that the conflict is beginning to escalate in a big way and that it has very real risks for the US stock market that is still trading at high levels as of the making of this video. Seeing this kind of breakout would prompt us to cut back some exposure to the US stock market and further increase our allocation to the energy sector. If you want to follow our trading strategy step by step and all of our analysis regarding this situation, make sure you are a member on our website. Thank you for watching.